So in this video, we are going to be talking about the top 3 stocks for this week. But I do want to take a moment to be clear. If you randomly buy and hold these stocks, you're going to have a bad time. Remember, you are the one that is ultimately behind the wheel. And as you know, you are the one that will pay if you crash. I won't be the one paying. Not me, not your neighbor, not the government. You are the one that will pay if you crash. So with that in mind, think of this channel as you would think of fog lights on a foggy mountain road. Much like fog lights, we can help light up opportunities and help you avoid obstacles. But at the end of the day, you are going to be the one that is driving, and you're going to need to know how to drive. So please make a commitment to yourself to not trade anything that you don't fully understand, and also do not trade without having a driving plan of action. Much like you don't get on the road without a plan of where you're going to go, don't start trading until you have a plan. But in any case, the only thing I ask in return for this fog-breaking video is that you hit that ravishing like button. Also, we're getting very close to 50,000 subscribers, and I really appreciate your support. Make sure to hit that subscribe button if you haven't already. Okay, so if you are wondering what broker to trade these stocks on, my suggestion is Webull. They have wonderful commission-free trades, a beginner-friendly platform, and as I've said many times, I think this is the best platform for many new traders in the stock market. And of course, trying them out with our link below will get you an extra free stock just for doing so, and also gives you an opportunity to support the channel, and supporting the channel always makes Charlie smile. Okay, so to start, let's start with A RDX. Now, A RDX has been running up like an inflamed banshee and just had their phase data released this morning. But don't hop on the inflamed banshee quite yet. This likely will offer cheaper entry points, which I'll explain later. But their run-up was due to their success in their phase data for their drug tenapanor. Now, we introduced ARDX 2 weeks ago with the exact dates at which catalysts would be happening. And as you can see, it was at 2:39 when we introduced it. This is a video that is still up. This is our top penny stocks video for September 2019. Now, I'm taking the time to remind you of this not because I am a magical pony that knows how to predict news catalysts, but rather because of the fact that these dates are all public knowledge. We, as the public, know about them beforehand. That means that we just need to find execution points to take advantage of these opportunities. But anyways, ARDX had a history of spikeability on news events, but just in the last 2 periods, we've seen it run up like an inflamed banshee. And the problem that I have with inflamed banshees is they run up so damn fast and eventually the banshee burns. That's what happens when you have an inflamed banshee. The flame will eventually just burn the entire banshee. And once it's completely burnt, the banshee dies and the stock price goes back down. You see, this is a play that had an increase in anticipation of the 2 FDA announcements. 1 was the phase data, which was released today, and 2 is the FDA approval, which is going to be released on the 12th. And with the first positive announcement, we've had a positive reaction to the phase data. But you see, since every reaction in the stock market is nothing but an overreaction, it's likely that this has been overfactored in. That's what happens when things run up in anticipation, and that is what happens when we have an inflamed banshee. And if it gets overfactored in, we will once again see it get beat down like a rabid dog. So why is this play still relevant? Why am I still talking about it if it's seen most of its move? Well, because ARDX will have an FDA approval on September 12th for their very same drug tenapanor that just had the positive phase data today. If the stock can spike this much on positive phase data, imagine how much it could spike on an actual FDA approval to enter the market. Phase data isn't as big of a deal compared to FDA approvals. Phase data spikes are in anticipation of a future FDA approval, but we still have 9 days until that FDA approval happens, and ARDX has a history of running up before news catalysts as seen here. So there are a couple scenarios that I see happening. In scenario or possibility number 1, we are shown that today's run-up was indeed an immediate overreaction, and then it gets beat down tomorrow or later in the week. But then it gradually runs up in anticipation like it did here before this news announcement. Second scenario that I could see happening is that we see it continue to run up or at least hold its strength as people factor in the likelihood of an FDA approval. And the elephant in the room here is that there is always that possibility that it doesn't get approved. And if it does get approved, analysts are expecting the drug to bring in over $700 million annually by 2024. And this is driving a lot of hype with media coverage including it in many top lists for this month's biggest catalysts. But we don't know whether it's going to get approved or not, and that's why we need to have specific entry points. But I want to be clear, while ARDX may reach new higher ground, I don't like buying extremely overextended positions. There's a lot of downward potential with frankly no prior precedent for context. For example, NBRV from a few weeks ago had an FDA approval, and it did run up as a result, but it immediately got beat down like a rabid dog before reaching overreaction lows and running back up. So I want to see some pushback when it comes to this play to fair value shorter term. I don't like to buy stocks that are overvalued. I want to find a good deal. I personally cannot stand paying above fair value for these types of plays, so please make sure to get in at a good deal. But what are the monkeys/analysts saying? Well, our beautiful monkey friends are predicting an average price target at $11 with the lower end at $6. So we do have a monkey confirmation of at least upward potential. But frankly, monkey see, monkey do. We don't care about the monkey opinions. We only care about how sheep investors react to monkey opinion. And since we are riding up in price strength, the FDA news catalyst and increased publicity combined with these high monkey price targets is likely going to draw in more sheep investors. And at the end of the day, again, it could still get denied FDA approval, in which case we'll see an overreaction downward. But because of this, you need to make sure that you are buying in at a confirmation of price strength and selling out at a validation of weakness. Always have a plan when trading these stocks. By the way, just to make this point that you need to have a plan, one of the hardest working members of our community, Robbie from our free ZipTrader Circle Facebook group, often makes a plan and then does a hindsight analysis of it afterwards for everyone in our group to see. He finds entry points where it makes sense and then executes on them and then gets out when it no longer makes sense, aka a validation. Gets in when it makes sense, gets out when it doesn't make sense. Pretty simple stuff. The reason that I love talking about these in these videos is because he puts a lot of his own style into it. He uses validation and confirmation, but he has also adjusted it with his own style. And I love this because it shows the reality of hindsight analysis. You see, in hindsight, it's easy to say we buy in at confirmation, but his broker executed him out later than he wanted. He's using Robinhood, unfortunately, and the Robinhood gods had other plans for him. And that's the reality. You're not always going to be able to get executed at the point that you want. And even though he wanted to buy in at confirmation, he ended up executing in later than desired. But he kept to his plan nonetheless, and it ended up being a good play. So the moral of this story is have a plan, follow it regardless, and then adjust it slowly until you see exactly what style works for you. And of course, the second moral is to join our free ZipTrader Circle Facebook group to connect with all different types of traders and other Zip traders. Okay, so this next one is going to be ULTA. ULTA got beat down like a rabid dog after a news release last week. And there is a lot of potential for this stock. But as usual, the masses are handling this in the wrong way. We are in this strange market condition where tons of traders are thinking it's a good idea to buy in blindly every single time a stock gets beaten down. Buying in blindly is never a good idea. Simply put, you always need to see signs that a stock is recovering. Taking a position just because a price got beat down in an arbitrary time frame never makes sense. Overreactions aren't necessarily confined to a small time frame. And we never just buy in because something is falling rapidly in price. That is insanity. I always say not to buy overextended positions or to chase winners, but that doesn't mean the reverse is true either. You don't chase losers. That's insanity. We as Zip traders simply don't buy sick and dying dogs on the side of the road, but it seems that the analysts/monkeys everywhere are suggesting to buy in due to the discount. Why would you buy into something when we don't even yet have a price confirmation of strength? For folks who did buy in without the price strength, they saw the price action go down further this morning. But in any case, that doesn't mean that there isn't some good opportunity here if we do see signs of a recovery. We have some good upward potential from 234 to previous breakdown resistance at 337. But you should note that this was a negative news catalyst and it will likely have some impact on the long-term value, but it just won't be at the overreaction lows. And I know there's always the possibility that in hindsight, when looking at this video a week or 2 weeks from now, that you're going to say, oh, this was the best entry point. But the problem is that just because this is a good entry point in hindsight on that specific play, that doesn't mean that it will be over 100 trades on 100 different plays. Overreactions are never the exact same duration, and while this could have been overreaction lows, you can never really say for certain until you have a bottom. Thus, it is very important to buy in at points that make you consistent on many trades instead of one that just makes you a lot of money on one trade. We're playing a long-term game here. Okay, great. Now this next one isn't going to be much of a surprise. When the market can't pick a clear direction and it has massive movements, it makes sense to trade off of volatility. And that is where our good friend T VIX comes in. Now, when I trade tickers, I always come up with these little entertaining stories in my head. I don't know if that means I have psychosis or I'm just a strange dude, but this is just something that I do. And when it comes to TVIX, I always associate it with TWIX, which is Twix. Those little candy bastards that rot your mouth but remind you why life is worth living. But the reason that I like this analogy is because TVIX offers sweetness whenever the overall market is volatile. And not unlike Twix candy, it will rot your teeth, aka your account, if you keep it in your mouth for too long. Thus, I focus on using TVIX for day trades to promote longer term consistency overall. For example, if we were looking at the chart for patterns based on previous price action, we can clearly see that TVIX is a directional play. Now, what does that mean? Well, the opportunities are when TVIX breaks into an upward direction. we have bubbles of price action to trade off of each and every time we've broken into an upward direction. And at close on Friday, we had a break of price action and then struggling of direction, which allowed us to get in and out at a good deal while also maintaining upward direction. And how do we trade off it intraday? Well, after identifying an upward direction, we can aim to buy in at confirmation, ride the price strength over our short-term blue SMA line, and then sell out at validation. Pretty cookie cutter stuff, but you need to make sure that you're having a plan where you're buying in at a specific entry point and selling out at a specific exit point. And that means that even if the price action turns against you, you still cut out at a point of price weakness, aka our validation point. Okay, well folks, I really do hope that this video was useful for you. Remember to never act on your emotions when it comes to the stock market. The stock market unfortunately does not care about your feelings, so if you go into it emotionally driven, you're probably going to have a very, very bad time. But anyways, if you'd like more of these short, sweet, and simplified videos on how to trade the stock market, make sure to hit that subscribe button. If you have any questions, feel free to reach out to us below or join our free ZipTrader Circle Facebook group. I also post nightly watch lists in the ZipTrader Circle Facebook group, so make sure to check that out if you are interested in that. Anyways, have a great day, folks, and I'll see you in the next video.